Investors worldwide have lost billions of dollars after one of the world's biggest crypto exchanges, FTX, filed for bankruptcy along with...
Celsius made headlines last month after freezing its customer accounts. Then the company and its CEO essentially went radio silent with no answers to customers on when they would get their money back.
With the recent price falls across all cryptocurrencies and the collapses of some of the biggest crypto exchanges like FTX and Blockfi, it feels a bit like cryptocurrencies may have hit the peak of their value in 2021 and that we won't see it return to those levels again. In this video, we're going to look into why this likely isn't the case and how crypto adoption is increasing. We'll also look at a key piece of blockchain technology that might cause the next bull run. What this piece of blockchain tech will do for crypto is being compared to what wireless connectivity did for the internet. If you're in doubt about crypto's future or looking for reassurance it's a growing industry, you're going to want to stick around for this one. Let's start by understanding how cryptocurrencies recently crashed from their all-time highs. In May of 2022, we saw the value of crypto assets begin to decline from the highs seen in 2021. Initially, this started out as a natural decline in asset prices as money began cycling from the crypto market to other asset classes like stocks and bonds. This natural decline turned into a crash when two of the most prominent cryptocurrencies in the industry, Luna and UST, crashed to the point where they became basically worthless. This triggered a chain reaction of multiple large crypto platforms that were heavily leveraged to collapse. Platforms like Celsius, Voyager, then later FTX and Blockfi. There may potentially be more to come still. As a result of all these large platforms collapsing, people started worrying that this may be the end of cryptocurrencies and that the industry as a whole is a scam. However, it's not the first time worries like this have surrounded crypto or even other new emerging technologies. If we look back at the emergence of the internet in the late 90s, we find that there was a very similar situation to what has occurred in crypto today. At the time, the internet, a new, poorly understood technology, came to prominence and people began quickly investing heavily as it was the future. This saw a massive run up in prices of stocks related to the internet. This is what gave the event its name, the dot-com bubble. Eventually, people started to work out most of the new internet companies were completely incapable of living up to expectations. Once this happened, people started selling quickly. This caused a crash, which was similar to what we see with crypto now, although slightly more severe back then. The dot-com bubble ended with many of the new internet companies collapsing and investors believing the internet was a scam and that they were fools for investing in it. However, many of the world's largest companies like Microsoft, Apple, and Google came out of this dot-com bubble and went on to become the backbone of our society. The crypto industry seems to have just gone through this dot-com bubble pop and is poised to take over much of the global financial system just as those tech companies took over computing. Let's look at how this is happening. The main factor leading to crypto's comeback is an increasing user base for the core function of blockchain technology. If we compare the crypto market to the dot-com bubble, we're almost at the stage just after the bubble popped, where the only people embracing the new technology are those people actually using it. This is the stage where everyone wishes they bought assets like Google and Amazon. I want to be clear, I don't think we have hit the bottom of the market yet, but I do think we're close. Regardless though, let's take a look at how cryptocurrency's user base is increasing to understand what will drive demand for it in the future. Right now, there's approximately 1.5 billion people in the world that have no access to financial services. These people rely on physical cash and often don't have any official identification such as birth certificates, passports, or driver's licenses. As a result of this, they have enormous difficulties accessing financial services such as insurance, lending, or even just holding their money in a safe and secure place. The ability to access these services is an essential component to improving the quality of life for themselves and their families, as well as fueling local economic growth. Imagine how difficult it would be to purchase a home or start a small business without access to credit. This is the main problem facing those that are unbanked, which in turn impacts their local area's economic growth, furthering the poverty cycle in their society. This hole in financial services has created an opportunity for non-traditional financial services such as cryptocurrencies to enter. As the financial services cryptocurrencies provide are hosted on decentralized blockchains, they are often referred to as decentralized finance or DeFi for short. DeFi's early capabilities were limited to simple transactions without established financial services for lending or insurance. However, this all began to change in 2020 as users began to realize how useful recently launched DeFi services were. This caused large-scale adoption of these financial services such as exchanges, lending facilities, and many other things. The adoption of DeFi continues today, although at a slower rate than it did during the peak of the 2021 bull market. We are likely on the precipice of DeFi seeing an enormous spike in usage, but more on this later in the video. Another factor causing adoption across the world is the increasing instability of the world's currencies. As inflation eats away at people's savings and centralized currencies have failed launches, people are increasingly looking for a currency that is inflation resistant, stable, and compatible with the digital world. So far, the world has been turning predominantly to Bitcoin for a solution, but unfortunately it fails to be a suitable currency for daily transactions. It is, however, seeing adoption as a store of value for an increasing number of people across the world, due to low international transaction fees and inflation resistance. Inflation can be significantly more severe globally than it is in the US, so the volatility of Bitcoin is a far lower concern for people living in those high inflation countries. The use of Bitcoin for these purposes highlights that there is a gap for a viable digital currency that can facilitate daily transactions which hasn't yet been filled. Up until now, the currencies filling this gap appear to have been US stablecoins such as Tether and USDC. These stablecoins have been seeing consistent growth since 2017, which accelerated during the 2021 bull market and continues today. Even though these stablecoins are backed by US dollars, they are actually cryptocurrencies and provide a stable asset for people to use with DeFi. However, one key aspect that allows for true decentralized finance hasn't seen widespread adoption yet. This aspect is verifiable digital identity. As I previously outlined, identity is a core component of finance. Without identity, it is difficult to get a loan for a house or a small business and impossible to get insurance, as trust can't be established and risk can't be measured. This is why adoption of decentralized digital identities in DeFi is seen as the Wi-Fi moment for cryptocurrency, as it will connect 1.5 billion people to financial services that they previously had not had access to. Let's dive deeper into the impact decentralized digital identities will have on the world. Digital identities are not a new concept. They are an idea that was initially conceptualized at the dawn of computers in the 60s. They have, however, taken many forms thus far, some of which you would be familiar with. It's important to note that there are two different types of digital identity: centralized identity and decentralized identity. Centralized identities are what we already have. These are everything from bank accounts to social security numbers. These types of identity rely on government-issued IDs, which can be problematic in unstable countries with weak governments. They are also often siloed for each individual service. For example, you can't use your Facebook account to log into your country's tax service. Self-sovereign identities, better known as decentralized identities, are a new type of identity which weren't possible until blockchain technology emerged. This is because blockchains allow for data storage without giving up control to someone else. For example, a user's Google account, which is a digital identity, can be deactivated, deleted, or blocked by Google because it's stored on Google servers. This is impossible in blockchains as the user retains complete control. Out of the two types of digital identity, decentralized identities appear to be better for most people. However, we will focus specifically on the applications of decentralized digital identity for unbanked users. How these identities work is a topic for a full video on its own. What you need to know about them for this video is that they are tied to a single wallet address and contain all of the identity information of our user. This includes everything from their birthday to their qualifications and academic records. The user has full control over who can verify information attached to their ID and how that information is expressed. For example, if I requested to sign up to Facebook and they wanted to verify that I'm over the age of 16, I can send them cryptographic proof that essentially confirms I am over 16 without telling them my actual date of birth. Decentralized identities present a new way of interacting with the online world, as they can serve as login credentials for all online services and allow for financial services that are connected directly to other individuals. Let's clarify this last point a little more. Traditionally, most people would access financial services by providing a bank with their ID and credit score, which would form the basis for the bank's decision on whether or not to lend money to that person and at what rate the interest will be charged on that loan. The money the bank is lending to the person actually belongs to other people that are storing money with that bank in their bank accounts. In theory, the bank takes a small amount of the interest for itself and pays the rest to the actual owners of the money. In theory. This arrangement essentially turns a bank into a program that verifies the borrower's identity and lends out depositors' money in a calculated way so as to earn interest on that loan. With digital decentralized IDs, the bank would be replaced with a computer program on the blockchain called a smart contract. These smart contracts are run purely by code and have no humans involved in their operation. This means instead of having a bank as a middleman that makes all the decisions for both ends of the transaction, borrowers and lenders connect directly through a computer program. Lenders will be able to group borrowers into batches based off their creditworthiness and determine the details of the loan they're willing to offer. We have seen the beginning of this type of service through platforms like Aave. However, the loans are usually over-collateralized and don't allow for true DeFi. Currently, these decentralized IDs are in various stages of early adoption across the world in countries such as South Korea, Georgia, Ethiopia, and more. The most notable case of decentralized ID being implemented so far is seen in the Ethiopian education system, where they are using decentralized IDs to store academic records and make them easily accessible for pupils. For the Ethiopian government, this is serving as a pilot program to test the technology before expanding it to be used for the majority of government services. The key takeaway is that both centralized and decentralized digital IDs are gradually being launched across the world. This will drastically improve the ability for people to gain access to lending, insurance, exchanges, and more. This will be the key Wi-Fi moment that allows people to access cheap and trustless DeFi over the expensive, corrupt, and hazardous traditional financial institutions. This widespread use of DeFi will bring crypto back into the spotlight as a legitimate asset, just as what happened in the mid to late 2000s with internet companies. I want to be very clear, this isn't financial advice about when you should buy into the market, but I do think understanding crypto's place in the world and what its offering is will give people faith it will come back. I suspect we aren't quite at the bottom of the market yet, but we're close in my opinion. This is the time to buy the future infrastructure of the world, not other crypto niches like metaverses or NFTs. I would suggest looking at the videos popping up on the screen now for some of these infrastructure plays. Otherwise, thank you and see you in the next one.